G'day and welcome to the last Morgans Edward Street weekly wrap for 2017. As the curtain closes on the current year, we have seen the ASX 200 run from 56,065 points to its current level of 6,011 points. This indicates a 6% jump in the share price index, which has been well supported by the low global interest rate environment. So are the good times over? Well, not according to our chief economist Michael Knox, which is forecasted for the market to reach 6,200 points by April next year. This has also been supported by our technical analysts over the medium term. Before we start talking specifics, please note that our comments are general in nature and please speak to your Edward Street advisor if you wish to know if any of the following stock recommendations suit your personal needs and objectives. I'll now pass you over to Brad to build on the recent macro events.
Thanks, Cam. It's been another busy week with the big news coming from a couple of billionaire businessmen selling parts or all of their businesses. I'm referring, of course, to Frank Lowy selling Westfield Corp to a French-based property business for about 33 billion Australian, and Rupert Murdoch's controlled 21st Century Fox being acquired by Disney in a deal worth about 68 billion. Understandably, the repercussions from these deals will be felt over the coming months. Where does this place us in the property cycle? Well, clearly the Lowy family believe we're somewhere near the top. Similarly, it looks like the Murdoch family believe that size matters when it comes to competing with the content providers like Netflix, Apple TV, Google and the like. In commodities, oil has ended the week flat at $63.50 per barrel and it seems to have found support at this level. The Aussie dollar is at 76.59, is also quite stable around these levels. I'm expecting the volatility that has been a key feature of commodities this year to level out over the rest of December as the traders and industry players take a break from the holidays. And on that note, if anyone else asks me about Bitcoin this year, I'm going to turn my mobile phone off, put it in a jug of beer and put my head in the sand till 2018. On that note, back to you, Cam, to give us your best idea for the week.
Thanks, Brad. I think I'll join you in the sandpit. The stocks I'm covering today is Emeco Holdings, ticker code EHL. I've been watching the stock retrace from recent highs of 26 cents and believe this stock is offering value at the current price of 23 cents. Emeco is a Morgans pet stock which is engaged in renting mining equipment and currently services resource projects across Australia, Canada and Chile. We believe this company is well positioned for a big FY19 with sector tailwinds from increased activity in resources, as well as reports we've received that the mining equipment market continues to tighten. Emeco recently undertook a 70 mil acquisition of Force Equipment and Maintenance, which our analyst believes will be a natural fit for the company. The acquisition will enhance Emeco's footprint in WA, will increase the fleet size by 179 machines and will also lower the costs by internalising their repair and maintenance operations. A lot of these benefits will not be seen until FY19, however we believe investors should get in and get set as the mining space remains cyclical industry and can change very quickly. Our analyst Tom Bethlehem has a 33 cent price target on the stock, which represents 43% upside to the current price. Whilst this investment is not without its risks, it's clear that there's significant upside if timed well and you treat this as a cyclical investment.
Thanks, Cam. We've had a busy week with Wagner's listing well last Friday and continues to trade very well, up from $2.71 listing to $3.63 currently. And today, National Tyre and Wheel lists, stock code NTD, so keep an eye on that one too. That wraps the final edition of our weekly wrap for this year. Let me take this opportunity to wish all the clients and families of Morgans Edward Street a happy and safe Christmas, and we'll see you again in the new year. I'm Brad Burns.